Practice isn't the thing you do once you're good. It's the thing you do that makes you good. Malcolm Gladwell. Practice, practice, practice. How do you get to Carnegie Hall? Practice. That's what we do here every day. And my friends, it's only 10 to 15 minutes. But it has to be every day. Why? Because you're not going to learn the nuances of how the market moves if you're not looking at your ETFs or stocks every day. And people say, well, Tom, you track 4 ETFs. Does this stuff work on other things? Absolutely. But you have to make sure you backtrack those and make sure that you have valid weekly vertical crossovers. That is when we have the price percent oscillator cross over the red signal line. You want to find ETFs or stocks where those work time and time and time again. 80 to 90% is what we prefer. Same with your 2-day recrosses. That's where the 2-day chart rotates back over in the same direction as the weekly after it pulls back. I'm saying the 2-day pulls back and then crosses back over. I'll show you one of those in just a minute. But again, if you want to know more, go subscribe at chartingwealth.com. Guess what you get? You get our special trainings we put out every single day. The training we have for our subscribers, and that is for free today, is how to master the charts. It's me telling you what you need to know to master the charts, to get you started. And again, our book is available. You can find a link in the show notes, but just start 10 to 15 minutes a day with us. You want to supercharge that training? In your show notes every day that you get as a subscriber, there are PDFs to the daily market worksheet, weekly market worksheet, and trade worksheet. I'm going to put how to use those worksheets, all 3 of the trainings throughout the course of this video, and wrap them all up at the end of the video. Also, you'll see links there. So that is the quickest way to supercharge your training, is to start filling out at least the daily market worksheet, and then when you do practice trades, the trade worksheet, and once a week, the weekly market worksheet. That's on Fridays. Now, everything else, the dailies, are each and every day. Easy to use, supercharge your training. Let's jump into these charts. We had that weekly vertical crossover going up on Friday. What did the charts do for us today? Up 1.25%. Not bad, not bad. Glad to see that working. It has been squirrely on the S&P 500 going into this election starting in October. Really, really wacko and weird. So hopefully we'll get back to some normality. We had such a fabulous summer, did we not? With the market just spiking up all summer long. Then it started getting weird on us. Hopefully, we're going back to normal. What do we see on the 2-day chart? Now remember, that latest 2-day candle ended on Friday, so today's candle is only half. It's 1 day of the 2-day. Look at that though, higher, moving up quite nicely. We're going to go ahead and redraw our trend line. Let's see if we can connect 3 candles. Well, we don't want to draw on the new candle yet, because what you'll find out is if you draw it too early, it will move on you. So we'll connect the 2 prior 2-day candles, and it's close. And we see prices above the 2-day, price percent oscillator moving up at a nice even pace, derivative oscillator gaining upward momentum, half-day chart. What do we see there? We saw how things popped up in the morning and then a little bit higher in the afternoon. Again, moving up. That's good to see. Price percent oscillator pulling away from the red signal line. Derivative oscillator going positive in the morning and further positive in the afternoon. Good signs. Again, it has been so weird lately. What do we see on the NASDAQ 100, the Qs? We see that there's a slowdown in the up movement. That's what that red open box candle means for us. Heikin Ashi candlesticks. We have great trainings on the Heikin Ashi candlesticks. Most popular training we've ever done. We're probably getting close to 200,000 people that have taken that. If you haven't, look up Heikin Ashi candlesticks, HEIKEN-ASHI. That's Japanese, I'm told, for average pace. That's what they help you track. It's not the high open, low close. It's another way we think it helps you follow price movement a lot better. And you don't have to sit there and learn all these different sometimes silly types of characteristics of the candlesticks where you see, oh, the 3 dead crows and all those things. It sometimes work, as they did on those last 3 dead crows. Other times they don't. So again, we like the Heikin Ashi candlesticks because they help us just see average pace. Now, what do we see on the price percent oscillator? Sliding sideways. Just sliding sideways. Derivative oscillator negative, losing downward momentum. That's where we are on the weekly, so a slowdown in the up movement. What do we see on the 2-day? We see, again, starting the week off with a nice up candle, going to a higher high, bigger candle body moving higher, also wick on top moving higher. Price percent oscillator going up steady, moving away from the red signal line. Derivative oscillator gaining upward momentum. And what do we see on the half day? We see it crossing over in the morning and moving on up in the afternoon, but not reaching a higher high. So again, pay attention to that as we continue to move forward. We'll go ahead and redraw our trend line. For those of you wondering, what kind of charting platform do you guys use? We're using a web-based version, which means anywhere I travel in the world, I just get on any computer, go to tc2000.com, tc2000.com, sign in, and boom, my charts are there. Also, if you subscribe, $25 off. Use the link in the show notes. And the beautiful thing about it, we give you the link for TC2000 that we use here, our charting platform, ours, available to you for free. So consider that. People write me all the time and say, hey, I'm using such and such a trading platform. It doesn't have the Heikin Ashi candlesticks. It doesn't have the price percent oscillator. It doesn't have the derivative oscillator. And I'm like, you're using the wrong platform, my friend. If you look at what is available by the Warden Brothers at TC2000, it is virtually every indicator you can imagine. And we encourage you, experiment. If you can find a better way to follow price movement, do it. Practice, practice, practice. So that's where we see, that's what's going on with the cues as we start the week. Just waiting to see what's going to happen. Are we going to have a weekly vertical crossover at the end of the week? Don't know. We'll see how things continue to move along. Going to leave stocks, go to bonds. Bonds down for the day, 0.24%, forgive me. My eyes were deceiving me. What do we see here? We see a solid green, a little solid green candle. Now, solid green as opposed to open box green, that means up movement. Solid green means a slowdown in the down movement, sort of the opposite of that open box red candle, slowdown in the up movement. We see that the derivative oscillator losing momentum, price percent oscillator still going down about the same rate. And if we update our trend line, it's about as good as we can probably do it. Probably about as good as we're going to get it here. We can see that we are below the 2-day trend line. I'm sorry, the weekly trend line. We go from the weekly to the 2-day, and we can see where the 2-day has busted out of that trend line on the day. Now again, it was a down day, but these Heikin Ashi candlesticks are showing us where the average pace is. It's up, as is the derivative oscillator is gaining upward momentum. Price percent oscillator heading up, but it hasn't crossed yet on the 2-day. So again, slow down in the down movements. What we're seeing, look at the half-day chart. It is sliding sideways. So the 2-day chart showing us a slowdown in the down movement. Actually, we're seeing up movement there. The weekly chart is continuing to trundle down. Remember, all movement first starts in the half day, but there has to be a lot of it to then affect the 2-day. How many times? Well, 4 times that. It's a half day. 2 days is what? 4 half days. Yes, that's a bigger wave. What we call the intermediate wave is the 2-day. And then the big wave is 2.5 2-days. So every movement, of course, always starts on the half day. But just because the half day crosses over going up doesn't mean that everything's turning around, because you can see what's happening here is it's starting to slow down. Now, it could just be slowing down to gather steam and pop up again. That's why we continue to watch, in particular, what's going on on the 2-day, but most of all, what's going on the weekly. Because all things being equal, the market tends to move in the direction of the largest chart. Now we leave the bonds and we go to the gold. What is going on with gold? Looks sort of similar to bonds. Slow down in the down movement. Price percent oscillator, though, still heading down. Derivative oscillator losing downward momentum. And can we draw a better... I don't like using a green candle to draw my down movement. So we'll leave things where they are. We'll go, and again, derivative oscillator losing downward momentum, price percent oscillator still heading down. We go to the 2-day chart, flat on the price percent oscillator. That's our main indicator. The derivative oscillator's losing a little downward momentum, still negative. We see a green open box spinning top. Indecision tending up. And again, we'll continue to watch that. That's just the first day of the latest 2-day. Price is still below that 2-day trend line, or really just right on it. So we'll keep an eye on that. What do we see on the half day? It crossed over, but look at what it's doing. It's sort of hitting the same top, just sort of sliding along that weekly trend line below the 2-day. What do you think gold is going to do? Is it going to gain a lot of energy and push through those trend lines, or is it going to sort of back off and roll back over? We don't know. We're going to wait, watch, and see. Remember, things are still negative, particularly on that weekly, so the bias is still to the negative. So we'll watch and see how things sort out, but we are quite happy with that up movement today after the weekly vertical crossover on Friday of the S&P 500. Friends, that's where we are as we end the day. Like I said, special trainings for you at the end of the video on how to use our daily market worksheet, weekly market worksheet, and trade worksheet. Those are available in your show notes for free, those PDFs, every day. God bless, my friends. All the best from the whole team at Charting Wealth World Headquarters.